Welcome back into the show today. Today we're going to be diving deep on a lot of market trends that are starting to break down. You don't want to miss it. My name is Paul Barron. Let's get started. I do want to thank our sponsor today, and that, of course, is Coinbase. You guys can jump over to Coinbase.com. It's very easy to do. All you have to do is visit Coinbase.com, and the future of money is here. One thing about Coinbase is you're a business, you're an individual, doesn't matter. You can set up your account over there and get started on your own crypto journey. Make sure and use our link down below. It will help the channel and we appreciate it. All right, guys, let's get into a couple of things here. I want to just jump into a few elements that really are starting to kind of frame where the market is heading, because we've had kind of a little bit of an up and down situation, all starting in with, of course, Trump's call with Squawk Box yesterday. We did a whole piece on this yesterday. Check that video out. But of course, the thing about this that's interesting is when you look at what he was talking about this whole choke point, I guess 3.0, because this was in reference to the problem he was having with Bank of America. I want to go to a clip because this clip actually explains that the Bank of America takes responsibility. Listen in.
And your name came up, and so I wanted to get your reaction to that.
I'm telling you, I'm still trying to unsee some of the visuals that he created with his commentary. But look, the president's after the right thing, which is the laws, rules, and regulations around our industry became used to cause things to happen. It's whether it's BSA, ML, whether it's KYC, whether it's reputational risk, and you heard Tim Scott quote about it. It is right to go look at these rules, because at the end of the day, the president's on the right issue, which is we got to stop the regulators behind the scenes of whipsawing back and forth and forcing our companies and companies like ours to make decisions which Congress hasn't passed on, or he hasn't passed on.
All right, so a few things within this. First of all, that's astounding that the B of A executive would come in and actually say, yeah, well, the president's right on this. There's a lot of problems within the banking system of how these things are done. This was a reputational risk thing. So I had always thought that was more of a gut call. And there wasn't really clarification on maybe a system that's set up for something like that. Maybe there is, but interesting that they jumped onto that. Our friend Matt Hougan also came out with this piece right here. Let me kind of share this for you guys. This is interesting because within this note, he's referencing the SEC chair's new vision. And it's a pretty amazing statement what he's getting into. The biggest thing is that all this is not priced in. There's a few reasons why. I want to scan the article. Some of the big deals that he's talking about, of course, is what it means for investors. If you're in digital assets today, you probably already know this. But if you're brand new, one thing that you're going to note, three opportunities within this, and I agree with all three with Matt, and that is the best approach you're going to see is this basket of assets. And this could be everything from Solana, ETH, Cardano, XRP, Avalanche. You get the list there, near if you're listening on the audio. But the other things that start to really pay attention to is when people are not necessarily ready for, I guess, exposure to the true digital asset, but are more interested maybe in the ecosystem. That is where the super apps come in. And that, of course, is going to be Coinbase and Robinhood, both of which are barreling toward a head-to-head confrontation because Coinbase has been all on crypto and now starting to get in tokenized securities. Robinhood has been all on securities and now getting into crypto. And they've continued to grow both of these. Of course, Robinhood performing much better right now in their earnings. Coinbase having some struggle, even looking at a buyback. The third element he hits on is DeFi. Now, DeFi is a big deal. Uniswap was the one he specifically mentioned. And the reason is because it starts to connect the dots outside of the traditional system. One thing about here is with greater clarity, we could see a lot of these numbers, especially in these DeFi platforms, rise considerably. So traditional crypto markets merge. This opportunity is going to be huge. And I think that is another thing that people don't pay attention to. So this is all very bullish, guys. And when you look at where the market is right now, even though Bitcoin's trading back above 115, we're starting to see the market stabilize a little bit, but we're still dealing with a lot of issues that face us into the macro side of things. I'll share some of that in a second. I want to jump on to ETH, and I would say the super investor that is out there backing it right now, and that, of course, is Tom Lee. Basically says Ethereum is the biggest macro trade over the next 10 to 15 years. That in itself is huge, guys. For it to be the biggest macro trade over the next decade, to a decade and a half is like you are in the beginning of the internet era. And I kind of compare this to what's happening around the industry for quite some time. And I think Tom is starting to get the picture here. Now, how far will Ethereum go? Well, there's some big claims here. I want to go to this next clip from Tom Lee talking about just that. Take a look.
So eventually, I think someone on Twitter made the point that staking ETH for Wall Street is like gamers buying NVIDIA, that you would have done better to buy NVIDIA as well as be a gamer or being a gaming company. But because of, really how blockchains work, it is actually that exact idea that Wall Street is, if they're going to be tokenizing real world assets from money markets to dollars to stocks, that they're going to want to own ETH itself, but then they want whoever's staking it to actually be an entity that is really trying to further the goals of Ethereum. So I think we really serve an important purpose by staking ETH. Ethereum's had zero downtime. That is what matters to Wall Street. It's also AI, right? Actually, if people go back to 2017, because I think Ethereum is having its Bitcoin 2017 moment this year, where Wall Street is finally getting behind ETH. Bitcoin was 1,000 in the early part of 2017, and it was until August, and then it went straight up. I mean, literally went straight up.
Tom is very bullish, but remember, he has not been an Ethereum bull for a while. I mean, he started really predicting where Bitcoin was going to be going. And of course, we saw ETFs, then treasury companies kind of force everybody's hand into the growth of where Bitcoin is today, trading over, at some points, over 122K. So all of what he has believed is now coming true. One more belief he has, which this one will shock you, is whether or not ETH will flip Bitcoin. Take a look to what he say.
I actually think that there's a bigger upside story to Ethereum, because there's more skepticism to start with. Bitcoin wasn't necessarily something people shorted, they just didn't believe it. Wall Street is not professionally convinced Ethereum is even a surviving chain. I think the upside case for ETH is actually higher than, let's say, Bitcoin did 100x. I think that could happen because there is probably a significant probability that Ethereum could flip Bitcoin as well.
So 100x of Ethereum at this point in time, would that be about 40 trillion? Where do you see Ether price going, say, the end of this year?
Well, I think the near-term price people should think about is Ethereum getting to 4,000, because Ethereum is a better story than it was in December, and it was 4,000 in December. So just like saying, give it credit for where it is a year ago versus a year ago, it should be 6,000. But of course, there is going to be a lot happening between now and year end, including, other Ethereum treasuries starting to buy Ethereum plus Bitcoin goes up. So I think by the year end, it's not unreasonable to think 7,000, even 12 or 15,000 could happen.
All right. So first I want to just say, Tom is the chairman of BMNR, which is a ETH treasury company. So just remember that. He is talking his own book. I get that. But I think most investors do to a certain extent. Now, his statement, though, of 100x, that's an unbelievable number, because I think, first of all, the internet of value would have to essentially transfer onto what's happening on ETH. Doesn't mean that it couldn't, but it is a pretty bold statement. And I think, of course, flipping Bitcoin, it's another bold statement. Also, he was a little bit rattled there on end of year, because when you look at end of year, 7K, okay, I can kind of go with a 7K price point for Ethereum. I wouldn't say that I would double that to 15K just by, it should be there. Now, sure, there are some indicators because of what's happening in the treasury companies that it could go that direction. We're going to be watching this one really closely because the statement is pretty outlandish. One thing I want to share with you is this statement here by Eleanor Terrett. Of course, this is talking about liquid staking and the fact that the SEC and the Corporate Finance Division has provided some guidance around liquid staking activities. So all this is good. This is good for Jito. We'll probably see other platforms out there that are doing liquid staking, most likely as well, that are all benefit from this. So that is just another direction that I think we're going to continue to see. And so many people don't realize what opportunities are in front of us right now. I think the other issue that you have to consider is when you look at DeFi and you think about how big DeFi truly is, because most people don't trade on DeFi unless you're in the crypto space right now. Many of you are brand new to our show. But let me show you something right here. This is a tweet. It's kind of interesting, showing the volume of the Uniswap protocol. This is nearly 40 billion this month. So just step back, 40 billion this month, and we have not seen mass adoption. We have not seen major transition from Wall Street. Everybody's talking about it, but it hasn't happened. And I think that's a factor you guys have to look at. Further into this, I want to go over to what Matt Hougan said right here is Uniswap, 6 billion feels way too small. And if it were a company, it would be the 400th largest financial services business in the world after it just did 40 billion last month. So think about that, guys, for a second. That is the difference between where DeFi is going and where it is right now. It is very, very early in this stage. Now, I want to go to another article that was in here. This is in reference to the fee switch. This is the thing that will help Uniswap, I think, go to the next level. And what they're talking about is this whole issue around right there, and that is activating the fee switch. This is going to mean a portion of those fees would be shared with investors who own the Uniswap token. This is all very good for DeFi, and it would also help solidify what Uniswap is trying to do. And I think that's the position you guys have to look at is when you consider kind of the future of where digital assets are right now. And you think about the fact that DeFi has been pretty much excluded from everything over the past several years. What is this going to look like in the next 12 months, 18 months? All right, so let me show you this tweet right here. This is another token or project that's not been priced in. This is, of course, being Solana, even though Solana is performing dramatically. But remember that the Seeker is now, you can see pictures of it being arriving. And I think this is just getting started. We don't even know what is going to happen. It's like the iPhone moment. We did not, when the iPhone hit the market for the very first time, we did not know or really completely realize what kind of ecosystem it would carry with it and what it's doing today. Now, one of the biggest ecosystems in the world. I want to go to a clip real quick because this is Toly talking about why people would buy this in the first place. Take a look.
So there's people that are like so plugged into the iPhone ecosystem that they can't switch. But you can get a second device that could be your NFT crypto phone, and you should have separation between those two because one is financial, one is not. But a large part of the world is not stuck in iPhone land. And 80% of the mobile sales actually are outside of the US. Like, I think if you waited too long, Apple and Google will eventually add crypto support because I think kind of crypto adoption is inevitable. But until they add it natively, it's an opportunity to kind of create a wedge. Right now, Seeker is at like about 150,000 pre-orders, and that's very, like, it's a sizable developer ecosystem. But if it gets to like 1 million plus, then I think it's long-term sustainable. And then it would be hard to actually disrupt that.
All right, so two things he says there that are very important. One, of course, he's talking about the iPhone ecosystem. I agree with him to a certain extent. The second phone thing, I think a lot of people are starting to do that now. However, the one thing that could save Apple, and I believe Apple is on its dead man walking phase, is if they did flip on the switch for crypto. If they truly embraced digital assets, NFT, and Web3, that could change Apple in general. It also could help adopt Apple globally because the crypto universe is so much bigger than the United States. But at the same time, when you look at, yes, what Toly said is the iPhone ecosystem outside the US, very small. But think about the amount of money that funnels through these iPhones in the US. Largest trade market. Why Trump's sitting over here with all these big tariff wins, because everybody wants to hit the US market. It's where all of the money is being generated from. That would be the only challenge. Solana has one big thing they've got to do. They got to get to 1 million sales. That's the thing. Now, the way they can do that is maybe through airdrops. Listen to this clip and you'll understand.
So you mentioned Bonk. There were a bunch of examples on Saga where we saw a very consistent pattern. Developer teams wanted to get the attention of Saga users. They saw value in them and they could trust that they were real users with real phones. And so it was worthwhile to them to offer things like incentives and rewards programs and boosts and exclusives. And so with Seeker, one of the things that we're keeping alive from Saga is that concept through what we call Seeker Season. So starting in September, there's going to be a whole bunch of teams on a weekly basis bringing something new, something exclusive to the dApp Store, whether it's a totally new app that hasn't launched anywhere else, or a set of features, or a set of rewards. We're excited to kind of carry that tradition alive and formalize it even further.
All right, so that's good. I think the fact that we'll see more DeFi or more dApps being developed is a huge thing. I just hope it does not go the way of the operating systems that tried to challenge, the powers that be, in the mid 90s and the 2000s. When you look at Linux, Ubuntu, many others that attempted to try to overtake the powers. Mobile is a much bigger issue. The key here is you've got to have something that draws people in. This is a real shift in finance. It's a real shift in technology. All of this, interestingly enough, and why I believe it's so much bigger than even the internet, is this is the first major meta wave that has occurred in the finance industry. We have not seen this kind of innovation ever in the entire history of finance. So you could look back in social and say, well, that was kind of a cultural event. Mobile, yeah, a little bit, but we had mobile. Then you can go back and say, well, we had, a lot in e-commerce. Well, yeah, but we didn't have the internet. So the thing is that what we are facing right now, I think, is a massive shift because it applies to finance more than anything. And we are going to be doing a video tomorrow. So you guys stick around. If you haven't subscribed to the show, it's going to be all about tariffs and a lot of new information coming in on earnings that will surprise you in a big way. So if you haven't subscribed, do it right now. If you're not in the Diamond Circle, make sure and get in on that as well. It's our own private group. It's absolutely free. Click the link down below and follow me out there on X. We'll catch you next time right here on The Paul Barron Show.